Hey everybody, Brian here. It's Wednesday, the 8th of June, and the market finished with a gain once again, and it is in an uptrend, so that shouldn't be coming as a surprise to anybody. We were briefly below the VWAP here today, but of course the buyers regained control, and the volume weighted average price from when this move began 4 days ago is really where we are, still seeing as an important level. So I think our first level of significance is 211.50. And then, of course, the 5 day moving average, which is continuing to rise. Other than that, don't overthink it. It's in an uptrend. It's innocent until proven guilty. The NASDAQ was up 18 cents as well. This market, maybe just a little bit more range bound, but nothing, to be worried about by any measure. The volume weighted average price since the beginning of this move is down near the low end of the recent range, which would be, there's your band of support and there's your band of resistance. And overall, though, we're in an uptrend. And of course, as we've been talking about for several weeks, we have this cup and handle pattern that seems to be setting up. And perhaps this NASDAQ will, in fact, follow the semiconductors, which broke beyond that cup and handle. And people have been trying to short this thing for the last 8-9 days as it just continues to rally. And the up too much crowd continues to try to short it, and to no avail. Buyers are in control. We've got this prior little resistance from late last week and Monday, which is where we'll find the 5 day moving average tomorrow as well. We can also look at, I think that you have to start looking at a trend line. And, would this be a relevant trend line? I don't think so. I think the most recent relevant trend line might look something like this, or even more, kind of like this. I think that's more valid. That would also kind of tie in with the 5 day moving average. So from here, anyways, the fact remains we are in an uptrend above a rising 5 day moving average, and people who are selling this short are doing nothing other than guessing, and they're guessing incorrectly so far. The Russell 2000, same story. I see people trying to buy the TZA, saying that it's up too much, etc., trying to be a hero and pick the top. But since we broke the top end of that cup and handle there, we've been just soaring higher and really giving the shorts exactly what they deserve for shorting into an uptrend. When we look at the bigger picture here, we have the potential for, the bigger potential of resistance is up near 120, and maybe this market's going to continue to run towards that level and torture these shorts until it gets up near that level and, takes out stops up above here, which would be just a pretty stupid place for stops if you're short to take all this pain and hope that that level is going to protect you. But the point is, we're in an uptrend, higher highs and higher lows, above a rising 5 day moving average. People will tell you it's up too much, but those people don't matter. What matters is the price action. It continues to move higher. The biotechs were down 26 cents today. They're trying to establish a little bit of support in here, but they are below a declining 5 day moving average, and the daily chart is still a mess, really. No reason to be involved in those stocks at all that I can see, except maybe on an individual basis. Apple is still holding above the volume weighted average price from the recent low. The VWAP from January 1st, you can see we're struggling with that right now, right in this area. So, with a declining 50 day moving average and a 5 day moving average flattening out, tells me basically that Apple is a day trading stock really in no man's land.